ETF fever seems to be sweeping the globe. Last year, a record 217 exchange-traded funds were launched, and this year there are hundreds more in the pipeline. Competition is fierce. Vanguard Group, the world's biggest mutual fund company, says it plans to start selling ETFs in Europe this year, putting itself on a collision course with rival BlackRock, which dominates the $332 billion ETF market in Europe. Well, let's bring in Deborah Ferrer, who is a global head of ETF research and implementation strategy at BlackRock. Thanks for joining us around the set this morning. Perhaps you can tell us first up where the flow of money is going at the moment as we head towards April. Is it going back into emerging markets?
You know, that's a good point. So it is going back into emerging markets in March. What we've seen is the flows into ETFs have really reflected what's happened in the Middle East, the weather conditions where we've seen droughts in China and bad weather conditions affecting agricultural crops. And we've also seen that the effect of what happened in Japan. So we've seen that people have used ETFs to move money out of emerging markets. When we looked at what was happening in January, we saw that the broad emerging market index had some net outflows, but money was still going into Brazil, Korea, Taiwan, and Russia. When we look at what happened in March, we see that money is going back into emerging markets. We're also seeing that some investors are putting money into developed markets. We're seeing money going into energy, technology, and some investors are concerned about inflation, so we're seeing money going into some REITs, real estate. We're also seeing money going into agricultural commodities. Many people feel that the energy price, once the Middle East is sorted, will come down, but in the short run, they're going into energy commodities. And we've also seen money go into silver and some into gold. So it's really a very diverse picture. Yeah. And the Japan ETF, it is interesting, actually has had net inflows, if you look at the one in the U.S. tracking MSCI Japan, of $1.7 billion. Wow. So what we've seen is it's really important to understand benchmark, because when you think about emerging markets, the MSCI Emerging Market Index, the only Middle East country in there is actually Egypt. So if you really want to invest or don't want to invest, it's important to understand which Middle Eastern countries are in a benchmark. Okay. And I would say that we also see that the MSCI benchmark being embraced by many investors is the preferred vehicle to invest in Japan. And I think the other thing we've taken away from this is ETFs that use multiple brokers that are physically backed actually are able to price better than those that only have one swap counterparty.
Okay, you know, in addition to the stable money coming back to EM, including EM Asia, in addition to responding to all the factors that you just talked about, how much of the money do you think is also front-running the end of QE2 in June and also the first rate hike to come probably by the end of the year by the Fed?
Well, I think clearly ETFs are a tool that can be used if you do have an expectation. I think when markets are volatile and correlations are high and you don't have time to pick individual stocks or bonds, ETFs are the preferred vehicle to do it. So I do think that people use ETFs to represent their views, both net inflows and outflows, as well as the secondary trading.
All right. Okay, Bernie, come in on this.
Thanks, Mark. Deborah, is that mindset changing, though? I mean, I have tremendous respect for the ETF industry. I've talked to Jack Bogle several times over at Vanguard, you know, the father of the modern ETF movement. But the active managers have been getting more and more prickly and aggressive lately, saying that when you're in a paradigm, you know, when you're in an environment where the central banks are all on the same wavelength, you know, in that delicate balancing between, you know, maintaining some mode of growth and inflation. I mean, they're all thinking the same thing with the same menu in front of them, that their relevance, you know, active management and seeking out bottom-up opportunity is more pronounced than ever. And they also point out that the trading costs are coming down, and the big divide between, you know, ease of entry, very, very low trading costs in the ETF universe and their universe is changing dramatically.
Well, I think the challenge is for many people is, you know, they're looking for where can they generate alpha, and as the investment horizon for people is changing, and also the markets people look at, so whether they're looking at developed, emerging, frontier, and all asset classes, you find that no firm has teams big enough to be able to pick individual stock, bonds, and other commodities around the world, and so they embrace ETFs. And we do see that, you know, earlier you were talking about how trading volumes are quite low right now. If you look in the U.S., ETF trading volumes in March accounted for 31% of all equity trades. So we are seeing that many people are using ETFs. And as I travel around the world, I would say that many sovereign wealth funds, hedge funds, pension plans use ETFs because unlike traditional funds, you can use ETFs to go both long and short. And so you do find that many people will use an ETF as a hedge and I'm not talking here about leverage and inverse. So I do think they have a functionality that isn't available when you look at being able to invest in a lot of markets where you can't go short.
Which describes the level of caution that we're seeing from investors. Thank you for stopping by. Great to have you on the set this morning.